From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for June 16, 2016. In just a moment, we'll be taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. But first, a recap a couple of the trades that we have been looking at over the past few days. Of course, taking a look at our news calendar, for the past 24 hours, we've had significant potential volatility with a lot of news on the calendar, monetary policy on several different countries being released. So it's been quite volatile. In the trade room yesterday, we warned against overexposing your account to trading risk because of the expected volatility. And we have seen some movement out of the currency market over the past 24 hours. And we still have potential volatility today coming up at 8:30 a.m. Eastern U.S. time. We have a good deal of U.S. news still to be released for the day today. So next hour or so, we could still see some potential volatility, but then some of the fireworks settled down a little bit. Let's get started here with the AUDUSD, the Australian versus the US dollar. This was trade analysis from yesterday, looking for an opportunity to go short into the resistance zone for the Australian dollar. Will depend on how you handled it going through yesterday's news. In the trade room yesterday, I mentioned the fact that if I saw some profit before the FOMC news yesterday, I may go ahead and close out the trade, which I did. I went ahead and closed out the trade prior to FOMC, which was good because it did spike up enough and would have taken us out at the stop loss. But now, of course, the market moving in the direction that we expected. If you held through that trade yesterday, let's go ahead and zoom it in a couple of times here on the daily time frame. If you held through yesterday's news and through the news over the past 24 hours in the shorts from the 7,400 level, you can see that this candle yesterday went as high as 74.45. So you had about a 45 to 50 pip stop loss to survive this spike higher. But if you did, you're now seeing profit back down into the 73.40s, over 50 pips of profit currently if you held through that trade during yesterday's news and volatility. Okay, let's look at two other things that we're going to be looking at today. I want to start over here on the euro dollar because we've been studying this one as well. Of course, as noted, a lot of news over the past 24 hours, so we definitely were watching that here on the euro dollar, and still some news to go today that could affect this currency pair. But overall uptrend has been in place. The red trend line, we're now coming down to attack that trend line and the 100 period simple moving average. Let's go ahead and zoom it in a couple of times. Note the support here at the pink shaded area. And this is 112 to 111.80. We discussed this during the trade room yesterday as a support, and here it is again. Market's challenging it and trying to break through it. If the market is successful and pushes through this pink shaded area, let's say an open and close underneath 111.80, I think we're likely looking for the continued fall. Now, today's news at 8:30 Eastern U.S. time, about 40 minutes from the recording of this video, could change this, but at least right now, the way it's looking is if it can break underneath 111.80, we're looking for the continued slide down towards 111. So that's what we're going to be watching for here. Not in it yet, but definitely watching for a breakout of underneath 111.80 for the continued slide. If it doesn't, then we could be looking for it to go right back around in the other direction, in the direction of the longer term trend that we've been studying in the daily trade room. Okay, let's move on over to the NZDUSD. I'm actually already in this trade, but that shouldn't be too surprising for anybody that has been in the trade room. We've been seeing the market underneath the resistance level. We have seen an influx of sell orders here. Resistance and influx of sell orders gives us some opportunity to go short here on the New Zealand dollar. I'm currently sitting about 12 pips of profit from the sell near the 70.45 level, but I still think this could be an opportunity on any bumps into the 7,040 or so level. 7,040, 45, the higher it gets, the better the risk reward will be for your trading. But we come in, let's zoom it in here a little bit. You take a look back here on the left, you see these two green circles. We actually studied those yesterday in the trade room, noting the fact that the market found resistance here and here. What we were looking for, it was resistance first, and then an influx of sell orders coming into the market. And we look at price action to determine that. Big spike at the top of a smaller bodied candle gives us a clue that the sellers have come back into the market. At one point, the current daily candle, let me zoom in one more time. At one point, the current daily candle was a big blue candle sitting above the 7,070 level, the purple shaded area. Now we've seen an influx of sell orders driving it back down underneath that purple zone, giving us a clue that sellers are still interested in this currency pair. If they're successful and we get news at 8:30 Eastern U.S. time that is positive for the U.S. dollar, we'll likely see this take a turn back lower again, back down towards the orange shaded area as our target. So that's what I'm looking for. I'm looking for selling, which I'm already in from the purple shaded area because of the sell orders that have come into the market, and targeting the orange shaded area. Anything underneath there will be further profit. The risk, of course, is clear. The risk is that it breaks back above the purple zone and starts moving back higher. So stop losses should likely be at least above today's candle, today's high, 7,100, 7,110, somewhere up into that area should be your stop loss if you're looking to get into this trade. And then, of course, 7,100, of course, would probably be okay. It's targeting back down to 69.80, 69.50. That's the orange shaded area, and anything underneath that last low that you see there at the orange zone, we will look for further profit here on the New Zealand dollar. Take it down to the 4-hour time frame. Again, we study the price action to determine the best timing to get in. Again, we saw the big blue candle, a little red candle with a wick on the bottom. If you're familiar with candlestick structures and formations, we might interpret that as a hanging man candle, small body, longer wick on the bottom. Then the red candle falling back down towards the 7,040 level, giving us an opportunity to go short into the 40-45 level, and now looking for the breakdown and turn back down into the 69.80s today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.